Hey, it's Chris Benson from Reliant Real Estate Management. Hope you guys are doing well today. I just read this article titled Carlyle's David Rubenstein shares his 10 steps of due diligence. If you're not familiar with who Carlyle Private Equity is, you should be. They manage over $300 billion in private equity. So obviously a major player. If you've heard of a group called Blackstone, Carlyle is very similar to them. So today I read the article, thought it was super interesting. We're going to go through those 10 steps, and I'm going to share with you why I think Reliant is a good fit in each one of those 10. But it's a great overview. If you're not familiar with how to do due diligence on a private equity real estate deal, where else better to get advice than a guy who runs a $300 billion fund? So his number one, and this is something you'll hear our team preach quite a bit, is I'm going to read verbatim what he says. Number one, look at the track record. That is the best indicator of future performance, although not perfect. And I 100% agree. We preach team and track record here at Reliant. Look, what you've done in the past is the best indicator of what you will probably do in the future. And he says, although not perfect, because no one understands what the future is. If you do, please email me after you watch this video and tell me what it's going to be, and we'll all make a lot more money together than in self-storage. But I think track record is the best indicator of what we can do at Reliant. We have a fantastic track record, 38 properties sold. We've never lost investor principal. We've never lost a property to the bank. And our average project level IRR is a 33% with a hold time of just over 3.5 years. So we've had a really good run to date. I think Reliant checked that box. Number two, also an interesting nuance. Was the track record achieved by people still in the organization? Sometimes firms have a great track record and the people who have achieved it have left. Great point, right? You have a team that puts together an incredible track record, and then the people who put together the track record leave and go start their own firm. That is not the case here at Reliant. When I started, we talked about team and track record. Our team has been here. Our average tenure is very long. The key management positions, both on operations, acquisitions, on the investment side, on the construction side, everyone's been here at least 3 to 5 years, kind of depends on which one you're picking. And we bought our first property in 2007. So we've been doing this a long time. And the people we have are still in the positions that have gotten us to this point. The thing on my side, which is always makes me proud, I guess, lack of a better term, is everybody's rowing in the same direction. We all understand what direction we're going in, and every key component in the business is working towards that. So checkbox number 2 for Reliant, according to David Rubenstein. Number 3, have the people investing in the fund put a lot of their own money in it? Every investor asks us this question at Reliant, right? Do they have skin in the game? Are we aligned to the investors? And the answer to that with Reliant, and specifically our most recent fund, is yes. We have contributed a significant amount of capital for skin in the game so that we're investing alongside our investors. But more importantly, at Reliant, when you talk about skin in the game, we sign on recourse debt. So if you're not familiar with that, what that means is there are some lenders that require personal guarantees for them to do the lending. And in our world, we do a lot of construction, a lot of value add. And so generally the lender wants some sort of personal guarantee from the principals of Reliant to back up that loan, to make sure you get the construction completed. And so we sign on those recourse notes personally. And so yes, it's nice that we have cash in the deal, but more importantly, our personal assets are on the line when it comes to skin in the game. For me, that's the piece that I think is the real skin in the game. The cash is nice, but if we lose that, doesn't change your world. You know, they come after you personally, you know, they take your house away. That's the skin in the game in my mind. So checkbox there. We are aligned with our investors. Number 4, are the younger people doing the legwork? Are they going to get an economic stake and they have some sort of carried interest? So meaning, is everyone in the firm incentivized to drive results? And the answer here at Reliant is yes. We have a incentive plan that our employees can participate in, where they're helping, or they are participating in some of the ownership stakes of the properties once they've hit a certain tenure at the company. And so we're happy to try to align the incentives of both our investors and all of the employees at Reliant. Again, I think what David's trying to hit on is to make sure the incentives of the investor and the incentives of the sponsor are aligned. So I'll check box that one for us. So we're doing pretty good. We're 4 for 4 so far on the David Rubenstein 10 steps for due diligence. Number 5, does the organization have a reputation for good ethics? In other words, are they being sued for fraud and things like that? Look, litigation doesn't always mean bad. If you're in this business long enough, sometimes things happen. We would encourage all of our investors to do their due diligence. We don't have any litigation in regards to fraud or SEC violations, which we're really proud of. But even if there were, I would say that that's not always a deal breaker. Sometimes people get sued, things are happening, you got a lot of moving parts. I think the biggest thing is the disclosure of it, and then understanding what happened and how you may have changed whatever the issue was. At Reliant, we don't have any outstanding litigation. We don't have any SEC issues. So checkbox number 5. If we were batting right now in baseball, we would be batting 1,000%, which essentially would make us the greatest baseball player in the history of the world. Only 5 more. Let's see how we do. So number 6, look at who the other investors are. Smart money knows how to find good deals, and it's very rare to find a great fund where nobody you've ever heard of is investing in it. Generally, people who know how to look at funds are going to find the best funds. So this is a little bit more towards the institutional tilt of investments. Most of our investors are what we would consider retail investors, so accredited high net worth individuals who are looking for alternative investments in real estate. We do have what I would consider smart money investor. We have 2 of them. One is Harrison Street Capital. They're a private equity shop, not as big as Carlyle Group. Carlyle's got $300 billion under management. I think Harrison Street has $40 billion. Not too shabby in the grand scheme of things, but a little bit smaller in the private equity world. Harrison Street has been a partner of Reliance since 2016. We bought 20 properties with them. In our current fund, Fund 3, they have an equity stake in 10 of the 30 properties of the fund. So they are a continued partner with us. We've had a lot of great outcomes with them, and they continue to reinvest. And then the second partner I would say is we have a family office. This particular family owns the Buffalo Bills and Buffalo Sabres out in Western New York. They've been a partner of ours for more than 10 years. I would consider them smart money as well. We've had a great relationship. They've been a fantastic partner, and our expectation is that relationship will continue. So we'll check box number 6. Box number 7, according to David, look at the organization's ability to keep people. If people are always leaving, that's an important indicator. I don't have the data for you specific on tenure, but certainly at the corporate level, our turnover rate is very, very low. At the site level, where people are managing our individual properties, I would say that's kind of an industry standard from a turnover standpoint. But generally at Reliant, our turnover is very low. Because I'm not giving you the data, though, I'm not going to check that box. So we're 6 for 7 right now. I'll take that so far. Number 8, whether or not an organization has made its track record in an area still relevant in the future. Because maybe somebody was good at investing in buggy whips, and he means horse buggy whips. Then the automobile comes along, and being an expert in buggy whips is probably not such a great thing. So the question I would ask with Reliant is self-storage still going to be relevant in the future? And I'm certainly biased in this opinion, but in my opinion, Americans are probably not going to become minimalists all of a sudden. So there may be a generational shift at some point in the future, but generally today, Americans like to buy stuff. And so we believe that as people buy stuff, they need a place to put it. And historically, that has been proven out. And so self-storage, we think, is a very viable asset class. Especially, we're recording this in July of 2022. We're headed in or already in a recessionary period. Generally, self-storage has performed very, very well during the recessionary environment. So, we expect that to happen again in this next economic cycle. All right, so 7 for 8. I'm 7 for 8 so far. Number 9, probably most importantly, whether you can get information from that organization on a timely basis when you need it. This is something that investors always ask us about, is how do you communicate with your investors? We have an internal investor relations team here at Reliant. We're always a phone call or email away. We try to respond to everybody in a 24-hour window. If we don't know the answer, we'll respond and tell you we're working on it. You can always schedule a call with our team. We do send out quarterly reports with our quarterly distributions that update you on your particular investment. But the thing we like to say is you're always one person away from your money. So the idea that when you write a check to Reliant as an investor, you have the ability to be one person away from what's actually happening with your capital. And I'll put it to you this way. If you invest in Amazon stock, for example, you are not one person away from Jeff Bezos. He's never going to take your, well, let me take that back. I don't know who's watching this video. Maybe not never, but unless you're a major shareholder, you're probably not talking to Bezos. At Reliant, you're generally one or two people away from the head of the organization. So if you want to talk to Todd Allen, managing principal, we can't do it every day, but he's on a bunch of our webinars and you have insight to him and what he's thinking. So communication, a critical component, especially when things are not going well. So real estate is a cyclical market. There's going to be ups and downs. We've had a tremendous up for the last 10 years. There's going to be a correction. And people just want to understand, hey, are you guys still there? Are you doing your best for me, even when things aren't working well? So critical component, 8 out of 9. I got one more. So 10 out of 10. Whether you feel that the organization's focus is on you, an investor, more than they, the organization, you have to make sure that they have a fiduciary mindset and they're more worried about your outcome than their outcome. Huge component to investing in passive real estate opportunities. You need to understand that our incentives are aligned with yours as an investor, but more importantly, that we understand that we can't do what we do every day without you as an investor. So we have 1,800 investors in our platform right now. That number changes kind of as we're buying and selling properties. But we understand that without those 1,800 people, we can't continue to operate self-storage properties and buy more. And so, the fiduciary responsibility we take really seriously to make sure we're trying to, one, protect your principal first, not lose your capital. And then secondly, make sure that when we are making decisions every day, how is that going to impact the investor as well as Reliant? So I'd check that box for us at Reliant. So in summary, there are 10 due diligence items. Reliant, I'm going to check 9 out of the 10. So I feel like, again, if we're playing baseball, we're the greatest baseball player who has ever played the game. I appreciate you guys watching this video. If you have any questions, we'll have links to our website where you can log in and see more information on our current investment opportunities. If you have any questions, we'll also have a contact us page so you can reach out, schedule a call with the team. Thanks. Have a great day.